Well, Scott Gecas is here with us with Walsh Trading in Chicago. We're on the lows of the days in some of these contracts, Scott. A little bit of weakness over here, quite a bit of pressure to go around. Is this just a lack of news, or are we going to test some of this support level to see if we can bounce off of it?
Yeah, well, I think it's a little bit of a lack of news. So we had positive trade war talks over the weekend, which was definitely a little bit supportive. But how much was that really priced in? So coming into this morning, we're seeing pressure just all the way across the board. So we're going to wait and see how this is going to really play out. We have demand concerns for the corn market in particular. You know, Chicago wheat is trading at a stiff premium to Kansas City wheat. That's starting to reverse right now, as we can see with contracts being on the lows of the day. So we have to wait and see where these funds are going to start to reposition things moving forward. From some of the farmers that we've been talking to, as well as traders, they're ending stocks concerns as well as yield concerns, whether or not they're going to lower them again. So those two factors, as well as that storm that came in through last week, that's definitely affecting some of these prices. So we're going to have to wait and see what real headlines are going to come out to continue to drive one way or the other.
What about the options side of this market then, Scott? Because I know you've tracked that pretty closely. We're hearing this morning that there are some areas with about a 30 to 35 cent positive basis here this morning.
Yeah, when you're looking at the option prices, 30 to 35 cents is really not that big of a deal. But when you look at upside skew as far as the premium over parity, what are you going to really pay for those? You know, for beans, you're going to pay about $4 more for upside calls and downside puts. At least that's how it was this morning when I was walking up. Corn was not as hefty as this, of an upside skew. You're still seeing about $1 to $1.25 in upside calls rather than downside puts. But just to keep in mind, though, that's typically where your risk is always going to be when you're looking at these types of commodities, because usually when you're the difference between commodities as well as stocks go bankrupt all the time. So that downside risk is always going to be the downside. Corn's never going to zero. Beans are never going to zero. So those upside skews tend to hold a little bit more in the call premium rather than the put side.
Okay. What about volume this morning? How has it been so far?
Well, the volume has been pretty light just in general across the board. You know, it doesn't really matter what market you're looking at, oil, gold, stocks, everything is pretty much trading a little bit light. We're waiting on some Brexit news as well as any other headline coming out of China.
That's a good point. We've heard a lot about both of those topics here this morning, about wondering where we're going next for that. Scott, we'll be back in just a moment. Stay with us. More is coming up here on Market Day Report. Why the weakness in the feeder cattle here today, Scott? Anything moving or shaking on that end?
Well, it's odd. So we have a lot of different things that are moving in the protein complex just right off the bat. So if we look at exports and cattle, last week we had about 13,000, which is well above about, on average, a 4-week average around 4,750 or 5,000 or so. But the market expected a much greater a number than the 13,000, even though that was a very solid number. So that's one of the reasons why you're seeing a little bit of a pullback, as well as a lighter cash trade. The cash trade was off about $1 or so, just depending on the area that you were looking at. But overall, you know, with the market fundamentals, the stocks are still continuing to rise. Demand is definitely there. You can see that through the exports, and that's why you're seeing a little bit of a bump up in price just in general. Now, if you flip to the other side with the hogs, I mean, that soap opera continues. The thing that really sparks my interest in the hog market is now you're seeing record numbers of exports to China, and now you're seeing Mexico start to import U.S. pork as well. So the worldwide demand for U.S. pork is definitely there. Traders are still net long, adding contracts. We expect that to be a continuation moving forward, the wait and see period. If we get any type of trade war positive tone or relief of the tariffs, you're going to see a big spike in imports. That import campaign is running full steam ahead. We expect that to continue. The one thing I do want to talk about, though, is even after all these great export numbers coming into this morning, early indications were that the deferred contracts in the hogs were going to be limited up. That was not the case. They opened up slightly, continue to hold those slight gains, $1 here, $1 there, but nowhere near what the market was expected coming in, especially with all the analysts, what they expect to see limit up in the deferreds.
Okay, on the opposite side of that, then, can you also say that maybe that lack of enthusiasm could put a drag on this market later?
Well, we have to wait and see. So one of the reasons why the U.S. pork is not just running full steam ahead is just because of the overall record production. So there is that short-term supply concerns. But the other thing that really not that many people are talking about is Chinese prices are up 190% year to date. So now you're running into political interest in that they want to keep those prices a little bit off. That's one of the reasons why you're seeing such a strong import campaign. So to curb that price surge, they have to import more U.S. pork.
Okay, Scott, thank you very much. Scott Gecas there at the edge of the trading floor. Walsh Trading at the end of LaSalle Street in Chicago. And now we'll have to see what the feeder cattle market can find a little bit of firmness here going into the close.